Hi, everybody. Welcome back to Ox Talks. Appreciate you watching the show today. Have a very, very important topic to discuss with you as it has to do with pending home sales around this country. Before I start, thank you for, again, watching the shows. Please subscribe to the channel if you haven't subscribed already. Hit that subscribe button. It doesn't cost you anything. And again, I appreciate the support for this growing community and growing channel. Please share the videos with as many people as you possibly can so we keep getting the word out as to what's really happening with the economy in this country. Just looking at the stock market today, you would not know that, okay? We continue to see a widening of the gap between the haves and have-nots, lower class and upper class, Wall Street from Main Street. Let me jump right into today's article that I saw just about an hour ago from Wolf Street. And it says, pending home sales, a forward-looking indicator of closed sales over the next couple of months, dropped by 5.5% in July from June, and by 8.5% from a year ago to an index value of 70.2 seasonally adjusted. That's the lowest in history of the index going back to 2001, when the index value was set at 100. And that's according to the National Association of Realtors historic data. So we have to go back to the beginning of when they started tracking the data to find a point in time, 2001, well over 20 years ago, when you saw a drop in pending home sales this severe. Predictions of rising rates during the summer amid much lower mortgage rates turned into the opposite. A sales recovery, it says, did not occur in midsummer. Lower mortgage rates will drive up sales. The same thing the NAR, National Association of Realtors, has been saying for months, the opposite of which actually has been happening. Mortgage rates, it says, listen to this, mortgage rates, it says, have already priced in massive rate cuts. The mortgage rates, the 30-year rate has been dropping. So why is that not stimulating buyers to get back into the market? I'll continue on here. The average 30-year fixed mortgage rate dropped to 6.35% in the latest reporting week, according to Freddie Mac today. This rate is nearly 1.5 percentage points lower than it was in October of 2023. Mortgage rates, which roughly parallel the 10-year Treasury yield, but on higher levels, have already, it says, priced in a long series of rate cuts. It says even if the Fed cuts a bunch of times, mortgage rates might not move much further since those cuts are already fully priced in. Leave your comment below. What do you think about that statement? Are mortgage rates going to continue to come down if the Fed does embark on a rate cutting cycle? Or do you agree with this author that it's already priced in, it's already baked in the cake? It says if the Fed doesn't cut that many times or more slowly than the market thinks, then we'll have to see. It says the sustained plunge in demand, despite much lower mortgage rates, is occurring even as supply in June and July jumped to around 4 months, both the highest since May of 2020, according to the National Association of Realtors last week. And it says an active listings in July jumped by 36.6. Let me get this screen off. Sorry, guys. It says active listings in July jumped by 36.6% year over year to the highest since May of 2020, according to data from Realtor.com. So you have pending home sales cratering. You have listings, active listings jumping to the highest in over 4 years. Meanwhile, mortgage rates are coming down, and the cheerleaders are telling you that this should be stimulating, or this will be stimulating and forcing buyers back into the market. Listen to this. Applications for mortgages to purchase a home in August have dropped back to the near record lows from November of 2023, when they dropped to the lowest levels in the data going back to 1995, according to the latest weekly data from the Mortgage Bankers Association. Let's talk about mortgage applications. They are an early indication, this article says, of pending home sales for August to be released a month from now. and closed sales further down the road. And those indicators are still going, it says a heck of a lot, are still going to heck. It means it's terrible data, going to heck despite much lower mortgage rates and surging supply. It says because, of course, prices, as we know it, are way too high. Sellers still have their head in the clouds. I have clients of mine that have been sitting on properties that needed to be sold, and they just didn't get realistic as to prices. And now what's happened is prices have continued to drop, and some of the people I know still are watching their equity literally evaporate, and they're not literally getting their brokers to do what it takes to get these properties moved. So, I mean, you have a lot of people, it's the same with any market, right? Greed takes over. Everyone thinks that we're going to cash out at the height of the market, that if there's a little dip in prices, it's going to come right back up. We may be embarking on a major downturn in prices. If prices do not adjust, what you're seeing here is it doesn't really matter that much necessarily if the mortgage rates are still coming down, if the inventory is going up. You're just not seeing buyers close these deals. So I want to share that with you today, and I will show you the chart here, because when you see it, again, a picture's worth 1,000 words. Pending home sales index, seasonally adjusted, all-time low, going back, this chart goes back to 2011. So take a look at that again. We're over here. Can you guys see that? We're over here. All-time low, okay? Pending home sales. Obviously, we know the dip there in early 2001, what was going on. But again, we're always seem to be going back and comparing data for the beginning of the time when these indexes started, or lowest of all time, or lowest in history. And look, nothing's even really happened yet, right? Has there really been a collapse across the board? Many people might think and might agree that there has been a collapse and this recession's well underway. But again, the stock markets today appear to be doing just fine, and the cheerleaders are still out and about. So I'll leave it there today. Again, thanks for watching the show. Please subscribe, and I'll talk to all of you soon. Bye.